Welcome to This Week This Morning, the weekly video that gets you up to speed on the week's most important developments for your business and your taxes. Stimulus negotiations have gone nowhere in the past week, so we're going to turn our attention to something that affects anyone who has to file a tax return in the state of California. Your taxes are going up, especially if you're a business owner, a wealthy individual, a high earner, or some combination thereof. There are a series of assembly bills that have already been signed into law and propositions that are on the ballot for the November 3rd election that would substantially increase taxes. We've produced a blog series entitled California Taxes in Focus on our website where we will continue to aggregate all of the tax increases that are on the table. So let's talk about a few of the notable tax increases headed your way. Number 1, Assembly Bill 1253. This bill increases California income tax on those with income above $1 million. This is already law and applies retroactively to 2020. This could increase your taxes by up to 3.5% if you're making some pretty good coin, putting you at a maximum tax rate of 16.8%. And if Biden gets elected, your top marginal income tax rate, combining IRS and California, would be 56.4%. And that's without factoring in FICA taxes or any of the other myriad indirect taxes. If you factor all of those taxes in, you're easily talking north of 70%. Number 2, Proposition 15. This would increase property taxes for businesses by requiring any business who owns commercial properties that, in aggregate, exceed $3 million to have the value of their properties reassessed every 3 years to fair market value. In other words, instead of paying property taxes on the much lower purchase price, you'll be paying them on the current fair value. The problem with this prop is that just because your property increased in value doesn't mean your business has more available cash flow as a result. And if your business rents, you're going to feel the pain of this one in the form of increased rents. The economy is just too fragile right now without further increasing the cost of doing business in California. Number 3, Assembly Bill 85. This bill suspends net operating losses for tax years 2020 through 2022 for those with taxable income greater than $1 million. It also limits total business tax credits to $5 million, even for consolidated groups of corporations. This is certainly not a comprehensive list, but it does give you an idea of the continued effort to put more of the California budget shortfalls on the backs of entrepreneurs, the wealthy, and those who just have certain years of elevated income. The bottom line is that we're in the midst of a shifting taxation regime, both on the federal and state levels, due to budget shortfalls exacerbated by the pandemic, as well as shifts in the political balance of power. Tax planning has never been more important because the changing tax system is going to make the pain of any missteps that much more damaging to your finances. All right, deep breath, and we'll see you next week.